Hello everyone, welcome back to Upside Down Data. Today I want to introduce our new risk indicator for Solana and its native token SOL. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So if you've been following the channel, you know the drill with our risk indicators. What I'm showing you here is the price action of Solana over time, with the price in logarithmic form and each dot being a day, and each day is color-coded based on the output of our risk indicator. So a score of 5 is high risk. That's when the upside potential is quite low, downside potential is quite high. And -5 is the opposite. When the downside potential is quite low, upside potential is quite high in the eyes of the model. So what I'm showing you here, if you haven't seen one of our more recent videos where we introduced the kind of new iteration of the UDPI that has some additional features beyond what the older version had, essentially the newer version of the UDPI, one of the things we can do with it is create these different time frames for the risk model to look at. We want it to look at more long-term risk that will track these more macro moves over the entire market cycle, or are we more interested in maybe more medium term, which is what I'm actually showing you right here, which will track not just these kind of big macro cycles, but then also these fluctuations in risk as we go, kind of points at which the upside potential is starting to get tapped out. We have to go sideways for a bit, then we can move back up, getting tapped out, have to go sideways for a bit, and then as we saw coming out of the summer, that really big pump that SOL put in. And now we've been more or less going sideways from there. You know, we did go up notably higher from where we got to here. You know, we did put in more moves to the upside. But overall, when you look at this, the price action has been relatively sideways. And then with this more recent correction in the market, we've really come just back into that range that Solana has been kind of in ever since it went kind of parabolic coming out of the summer. And you can see that from the medium-term UDPI's perspective, this is it's becoming more and more low risk. We're moving into these green zones down here. And now obviously it's not nearly as low risk as it was down here or even as it was in the summer, but it's getting down into that same range from its point of view. Now, I think it's also interesting then to compare what the long and short-term versions of the UDPI think, and we can just go ahead and just look at those charts and just compare them to each other. And by and large, these models are in alignment, but they're suggesting slightly different things, and again, they're looking at different time frames. They're caring about different things. So the long-term UDPI, you can see it's not quite gotten back into the green zone, although I believe it is down into the negative territory. We'll be able to see that in the next screen when I go over there. We can see the raw output. But, you know, it's definitely bleeding off, right? You know, it had gotten to this really high, this really red zone here, which basically when the UDPI will print levels like that, it suggests that at best you can expect kind of sideways action for a while. Maybe a little bit more upside is possible, but very limited upside potential is left. You know, the vast majority of the move is already over. You know, so much of the move is already over that your money might be better put elsewhere. You know, not financial advice, but in terms of how to interpret this, but that's just one of the ways that we oftentimes think about it. That once the UDPI gets red on a certain asset, oftentimes that means that the upside for that asset is kind of tapped out, and at least for a while. So the long-term UDPI is really tracking moves that happen over the span of months. And so essentially when you see a red reading, oftentimes that'll mean you have to wait a good while before that asset's ready to put in a really big move, or certainly before it'd be able to put in a move that's anything like the move that it just was coming off of. Whereas with the more medium term, a red signal means that you might have to wait kind of a matter of weeks before you might see some things. And then short term is you might not have to wait as long. And they're just concerned about different things, right? So in the medium term, you know, it's going to reset its risk more quickly than the long term if you wanted to maybe play these shorter things. And the short term, it's going to reset its risk even quicker if you wanted to kind of play those games and maybe, you know, be selling, re-entering, selling kind of an idea. Again, not saying how one should potentially use these models, but just some things that they offer. They're just talking about different time frames of risk and are kind of, you know, the long term is worried about these overarching zones of high and low risk. Short term is much more concerned about the more shorter term volatility and when the asset's likely tapped out its upside potential, or when its downside potential is likely tapped out in the short term. Like you can see this bounce that we had here back at going into the summer, and then this other bounce coming up here. Whereas for some of these other UDPIs, you know, the long-term UDPI was still getting itself kind of ready until then it flashed deep green here when it really thought it was low risk, and sure enough, we got the bounce. Same with the medium term. It's not worried about this kind of short-term volatility like the short-term UDPI will be. So let's take a look here at the three different raw outputs of the three different versions of the model, just to see this a bit more clearly. And here I think you can really see how these models are caring about different things, right? The long-term UDPI is really interested in these zones of high and low risk, right? You know, kind of hanging out at these different regions as it goes. And we can see that in the past, it seems like this 2 level of the UDPI has been a pretty important one. We really only broke above that once here coming out of the summer, so it'll be interesting to watch that going forward into the future. If 2 is this kind of a key interaction point for the Solana UDPI in the future, or if it's able to next big rally, if it's able to break back up into these really high risk level zones again. And we see that throughout. But then also what we can see when we look, for example, at the shorter term UDPI is how it does seem to be caring a lot more about that kind of short-term volatility, right? Instead of kind of being this zone kind of reading it's giving you, it's really telling you about fluctuations within those time frames. So if one wanted to take a more kind of aggressive or active trading strategy, one could be paying attention to these moves in the shorter term risk if one wanted to be trading on those kind of levels. Or, you know, the longer term is more for if you want to get a sense of what's going on in the broader market cycle. So again, just some ways that we think about this. You know, it's up to you. No financial advice here. You know, up to you how you want to think about these models. So to talk a little bit more then about what these different UDPIs are saying right now in terms of Solana's potential upside-downside ratio or risk. We can just look at this current levels and then also see kind of the recent trends over time. So here what I'm showing you is the long-term, medium-term, and short-term current levels. So negative 1.24 for long-term, negative 1.68 for medium-term, and negative 0.99 for short-term. So generally consistent with each other, you know, more or less the same, not really too different. So basically what these are saying is that in the long term, you know, Solana does have more upside potential in it right now than downside potential. If, you know, according to the model, you know, the model thinks that the upside outweighs the downside, but certainly there's more downside that's plausible or frankly, you know, realistic. Another way of thinking about it. So to see Solana can continue to correct would not be entirely surprising from the perspective of this model, because there is certainly a lot more room to the downside that it could go. But essentially what this model is saying is that in terms of the overall risk-reward ratio, though, it thinks that in the long term, Solana has more room to move to the upside than it has room to move to the downside, suggesting a more favorable risk-reward perspective from that angle. But not to say this is going to be the best risk-reward ratio that Solana is going to give us during this correction. You know, it really depends what happens with the broader market. If, you know, we had that other, you know, dump that Bitcoin put in over the last couple days, you know, Bitcoin, as I record, is kind of testing that low, you know, 42K kind of range. And so it's really going to depend, I think, what Bitcoin does. If Bitcoin is able to hold at these levels, and then especially if it's able to catch a bounce and move back to the upside, then I would expect the rest of the market and Solana with it to be able to put in upside moves. If Bitcoin breaks this support, then it's becoming questionable or it becomes a lot more plausible that something like a 30K Bitcoin could come into play if it's not able to hold its current level of support. And if that happens, I'd expect the rest of the market to really bleed off. And that's where Solana might really end up realizing some of this longer term downside potential if some kind of scenario like that were to play out. That's all just speculation, of course. Who knows what's going to happen, but just the way that I'm currently thinking about that. And in the medium term, you know, it's a similar story where the model thinks there is more upside potential in the medium term than downside, but it's still, you know, plenty of room to move down. And then for the short term, this is where it's most undecided about the short term, and I think that kind of makes sense, right? You know, there's certainly upside potential to go in the short term, but there could be a lot of downside to realize in the short term as well. So it's a little bit in the favorable side, you know, there's a little bit more in the model's mind, a little bit more realistic upside potential than downside in the short term, but there's certainly plenty of room to correct still if it wants to. So we're starting to re-enter those kind of really favorable ranges we've seen before for Solana in the past, but we're not at a point where anything is definitive by any means. So we're just gonna have to wait and see what happens. And really, I think Solana's fate is kind of out of its hands to some degree. It's going to really depend what Bitcoin and the rest of the market does. I think it'd be highly unlikely, highly surprising if Solana can pump and rally while the rest of the market sells off. I would be very surprised if that happens. But of course, it's crypto. Anything could happen. So the final thing I just want to end with is just to compare then Solana's current levels with some of these other kind of newer L1, layer 1 blockchains that have been putting in impressive moves more recently. And obviously these different assets are not the same. You know, there are many fundamental differences between them, different technologies, etc. So I'm not trying to say they're the same. But I feel like the narrative for these three assets has been kind of similar coming out of the summer, where Solana was really kind of the first one to move as putting in, kind of stretching its legs as a competitor to Ethereum, showing, you know, having low transaction fees, high throughput, all of those kind of things, getting a lot of DeFi attention, etc. And then after that was really Avalanche that put in an impressive move, you know, before kind of ending its big move before this more recent kind of the first part of this big correction we're in the market. AVAX put that in. And then Phantom also put in a really impressive move there. And then actually in the more recent days, we've been following the market, Phantom had put in a nice pump before Bitcoin kind of dumped. And now Phantom is starting to retrace some of that pump. But I just wanted to show a comparison of these because I think that it makes sense to compare these different assets to each other, because even though they are different, they are competing for similar things, right? They're competing for DeFi adoption. You know, they're offering similar strengths to each other in terms of the high throughput, etc. But again, I'm not trying to say these are the same projects or argue that they're the same fundamentally. You know, it's up to you. I leave it up to you to decide which of these projects you think is strongest or best. But I just think that they're useful to compare. And what we can see is that overall, it does seem like Solana is generally in a lower risk spot right now than the rest of these, with I think Phantom being the one that might kind of overall be offering the kind of the highest risk, not necessarily in the long term compared to AVAX, but certainly in the short term. Phantom has gotten quite overextended. I would expect Phantom to continue to correct, or at the very least not be able to put in substantial new highs above what it was able to do during its pump, unless something were to happen where the whole market were to pick up, and then, you know, everything might be able to pump. But in the short term, it seems like Phantom had kind of tapped out its upside potential, and I would expect it to not necessarily be able to do all that well in the short term. Anything can happen, but I would expect it to at best go sideways from here, but also it seems very plausible it'll continue to correct. And then AVAX has been kind of retracing itself from some of its strength that I've been showing. AVAX has been correcting relatively decently, but obviously still well up from even kind of the first leg of its run out of the summer. So it's not like it's in a dire position right now by any means, but certainly well off of its all-time high that it put in recently. And here we can see that the long-term risk is actually in a downtrend. So the model is thinking that in the long term, there's more and more upside potential coming in relative to the downside potential thinks is plausible. So it's still in the kind of the higher risk territory here, right? So the downside potential is still larger than the upside, but it's moving, kind of the needle is moving in this direction. And so it wouldn't be surprising to see AVAX re-enter this zone at some point in the not too distant future if the correction continues, or potentially if it just kind of keeps going sideways. And then the short term, the model is kind of reset along with the medium term. So in both the medium and the long term, the model thinks there's about as much up and downside potential in AVAX. So that's interesting. So for kind of a more short-term perspective, AVAX is kind of resetting. But if we're kind of thinking more kind of long-term focus, you know, there might still be some more downside potential that needs to happen before that kind of big next sweep to the upside is realistic from the model's perspective. But we'll have to wait and see. You know, anything could happen. So that's our new risk indicator for Solana. If you find these assets to be, or these risk indicators to be interesting, you should follow the channel, give us a subscription. We're putting out new indicators frequently, and now that we have kind of our updated version of the UDPI, we'll be adding in more and more indicators in the coming days and weeks, so keep an eye on the channel for those. And follow us on Twitter, where we'll also be putting out updates about those, as well as more of our thoughts about the market. So, as I was saying, give the video a like, follow us on Twitter, and subscribe to the channel. And with UDPI, we're all going to make it.